139 ticks on the NQ, minus 10 on crude, plus 45 on gold, and plus 8 on the ES. That put us at $1,145 per contract this morning. Today it took 4 minutes and 2 trades to get to the goal for the day. At that point, with 10 contracts on, we're up $1,600. And we took a total of 30 trades this morning. So on the month now, we're up $8,170 over 7 business days, averaging $1,167 per contract per 2-hour business day. On the year now, we are at $40,347. So over 27 business days, averaging $1,494 per contract per morning session. Okay, so on the month, we're a little bit below the annual average right now. We still have quite a bit of month left. We have more than half of it left, right? 2 full weeks plus a day. Now, this President's Day is coming up here pretty soon, but I think the markets are open on President's Day, right? I have to check that. I know that, oddly, banks are closed, and I think school might even be closed on President's Day, but that doesn't mean the markets are. Anyway, that's where we are today. On the month, $8,170, averaging $1,167. On the year, $40,347. That is with one contract. $40,347 with one contract. If you go all the way back to last year, see, what did it take to get to $40,000 last year on the year? On the year, right here, it took us 5 months last year to get to $40,490. And this year, we're a month and a half in. And we're at $40,347. So we're just about the same place we were last year after 5 months, right now, after a month and a half. Telling you, 2025 is going to be different. The 24/20 blueprint, if you quit trading when you got the goal for the day and you added 1 contract a month, so far you'd be trading 2 contracts, you would have only had to work 4.65 hours and you would have made $5,965 doing it the way that I do, right? That means you'd have an average of $1,282 an hour, right? For the time spent trading, getting your goal for the day. All right, let's get into the trades. The gold was our big winner today, I think. No, the NQ was our big winner today. Okay, but the gold we did well on again. Yeah, we missed a whole bunch of trades on the gold. See, our first trade in here on the gold, we picked up 1 tick. Second trade, we picked up 7 more ticks to get us to 8. Then 1 more tick somewhere to get us to 9. And then we went from 9 to 15, so we had a 6 tick. Then we went from 15 to 25, then 25 to 35, and then 35 to 45. And that is how we ended it with gold, plus 45. Gold was acting really well today. You know, see all these trades that I missed here? All these trades that I missed. I think one of them, could have been a break even, might have been a stop out. This one right here would have been a good trade. This would have been a good trade. This would have been a good trade. This would have been a good trade, good trade, good trade, good trade. This one here might have not. No, this one would have been a stop out right here. Actually, no. It went enough down, 6 or 7 ticks down before it went back up. So that would have been a break even at worst. This would have been a good trade if you took the long right there. Good trade here. If you took the long right there, I did take that and I got 10 ticks profit. I didn't do this. This looks like it might have stopped you out. Okay, and then you had this one right here. That looks like it would have stopped you out to the tick. And this one right here, that would have stopped you. And then this one, you would have gotten it back. Again, right there, would have gotten it back. And again, right there, gotten it back. So there were a couple of stop outs here during the break. But overall, gold was great today. Now, I took out the Russell and I added crude oil today, right? Because, well, we have 3 indices in there. So I thought I'd mix it up a little bit and throw in an energy. Since we have a metal, and energy and 2 indices now. Crude was pretty slow. Crude is in the process of rolling over. This is the J contract, and the H contract has just a little more volume on it right now. So this contract is going to be running pretty slow until all the volume gets into this contract. I believe next week it'll probably roll into this contract. But we took 1 trade here at the beginning. We got plus 5 ticks on that. And we took 1 trade here, and we stopped out minus 15 ticks. That put us at minus 10 overall on the crude. All right. During the break, there was 1 more trade right here at the open of that bar. This is a 9 tick range, so that would have been a profitable trade. There was another one right here at the open of this bar. That would have ended up being a nice profitable trade too. Okay, there was also 1 right here at the open of this bar. That would not have worked out. That would have stopped you out minus 15. Okay, and that's what crude did today. the ES, we were back and forth on the ES in the beginning, mostly back. But we'll go back to the beginning here. We had a break even, then a break even. Then we had a +1. And there's something in here I missed that got us to +4. I'm a +5. So it was a +4 in here somewhere that I didn't write down. And then we stopped out, and that was -10. That put us down to -5. Then we had a +5, got us to 0. Then we stopped out again, got us to -10. Then on this one here, we went from -10 back to 0. So we got a +10 there, and then we had a +8 right there. So we got us up to +8 overall. So it was mostly back and a little bit forth. During the break, there was one nice trade right there you could have taken, one right here you could have taken, one right here you could have taken, one right there, and there, and there, and there, and there. Every one of those right there that I just showed you, they were all winning trades until right here. This one would have been a break-even trade. The entry was right there, 4 ticks in profit, the stop goes to break-even. This right here would have been another winning trade. This right here would have been another winning trade. And this right here is working on a win right now. Would have gone long from the open of this bar right here. Okay, that was the S. So the S was doing well and was given a lot of opportunity today. Okay, now on the NQ, we did things a little bit different on the NQ today. We traded with the trend, going into the oversold with the trend. All right, it was mostly in an uptrend this morning. So we started out over here. Now I don't know exactly where I started doing it with the trend, but we started out way over here on the NQ, I guess. On the NQ is where we got our goal for the day right here. We got 32 ticks on the first trade. That's where we got the goal for the day. And that was using the divergence trade. Okay, we ended up getting 32 ticks on that move right there. And then we went from 32 to 36, so we got 4 more there. Then we went from 36 to 56, so we got 20 more there. And then over here, we went from 56 to 79. So we had some more there. Then I missed a whole bunch of trades. And in here, went from 79 to 99. So we got another 20. And then right here, we went from 99 down to 63. We stopped out minus 36 ticks. And then I think I switched at this point to doing the trend trades. Okay. So that's why right in here, there's a trade. All right, so doing the trend trades, let me just show you. Doing the trend trades, what I'm looking at, those of you guys who weren't there this morning, let me bring this up here. Those of you guys who weren't there this morning, doing the trend trades, what I'm looking at is you're above the YBR, so you're going to be going for long trades. There's an aggressive trend trade and a conservative trend trade. The aggressive trend trade is to take the trade as soon as this goes into the oversold. You buy the open of the next bar. The conservative is to wait till it comes out of the oversold and buy the open of the bar after that. All right, or by the close of the bar. So I was doing the aggressive way here. And on this one here, I went from 63 up to 111. And then I went from 111 to 135. And then over here, I went from 135 up to 139. And then I went from 139 to 159. And then I had to break even. Then I went from 159 to 171. Then I stopped out down to 135. And then I got 4 more ticks right there to get me to 139. Okay. That is how it worked out for me this morning. Now, I didn't notice this, but this should have been going the other way. I should have been selling the open of this bar right here. The open of this bar actually right here instead of buying the open of that bar. I didn't realize we'd gotten underneath the YBR right there. But do you guys see the difference? I transitioned easily and quickly transitioned from doing divergence trades when I saw the market was trending. If we had this big move up right here, one of those big moves up, after I saw the market was trending, I switched from divergence trades to trend trades. And that was simply by shutting off that. Taking trades above the YBR only longs, below the YBR only shorts, when it goes into the oversold for aggressive or when it comes out of the oversold for conservative. Okay, you see all these vertical lines right here. This was obviously not. This was doing the divergence trades, but over here is where I switched into the trend trade. So like right here, we would have bought the open of that bar right there. If you were doing the aggressive, you would have bought the open of that bar right there. If you're doing the conservative, you would have bought, well, the open of this bar right here. So that would have stopped you out doing conservative, would have given you profit doing the aggressive. This one right here, doing the aggressive, you would have bought the open of that bar. Doing the conservative, you would have bought the open of this bar right here. Okay, so conservative worked out as well. They both would have worked out on that. Over here, doing the aggressive, you would have bought the open of this bar. Doing the conservative, you would have bought the open of that bar. Okay, I think I did that one right there. I was doing the aggressive. This one right here, again, doing the aggressive, you would have bought the open of this bar, and doing the conservative, you would have bought the open of this bar. Neither one of those would have worked out, I don't think. Well, the conservative might have. It didn't pull back very deep right there. The conservative might have worked out for you on that. This is a 31 range too, by the way. And on this one, the aggressive, you would have bought the open of this bar, which is what I did, and the conservative would have bought the open of that bar, which would have given you some profit. You guys see the difference? Right here, the conservative, the aggressive, when it goes into the oversold, you buy the open of the next bar, which is what I did there. And the conservative would have bought the open of the bar after that. You would wait till this bar closed and bought the open of that bar right there. Okay, same thing on this one, bought the open there or the open there. And on this one, no matter which one you did, I think it would have stopped you out. Actually, no, if you would have done the conservative on that, it wouldn't have stopped you out at all. You would have bought the conservative. I did stop out on the conservative. I bought the open of that bar and it stopped me out pretty much to the tick. And if I waited for the aggressive, I would have bought the open of this bar right here. You waited till this bar closed and then bought the open of that bar. So that would have been break even probably. Do you guys see that? Right over here, the aggressive was buying the open of this bar. Conservative was buying the open of that bar. Of course, we were under the YBR there, so I should have been actually selling and not buying. But if we go through the rest of these right here, you can see when it got up into the overbought right here, under the YBR now, so you're selling, I would have sold the open of that bar, aggressive, or conservative, I would have sold the close of this bar. Looks like either one of those would have stopped out. Aggressive, I would have sold the open of that bar. Conservative, I would have sold the open of this bar. Aggressive, I would have sold the open of this bar. And conservative, I would have sold the open of that bar. Both of those would have worked out. Okay, over here, aggressive, I would have sold the open of that bar. And conservative, I would have sold the open of this bar. And both of those worked out as well. Most of the time, the aggressive is going to get you in a bar early. So far, it's only saved you from one stop out, but it's gotten you profit where the conservative would have gotten you break evens on some of these. And you see right here, you would have bought the open of that bar. Conservative and aggressive, you would have bought the open of that bar. So that might have been a break even. Aggressive, you had that whole extra bar in there. You see how that's working? It's pretty straightforward, I think. Like right here, you would have sold the open of that bar with the aggressive when it went up into the overbought. You would have sold the open of that bar with the aggressive, or with the conservative, sold the open of that bar right there. Okay. This stuff down here is something that I'm working on to get rid of the flat spots. You'll notice there are no flat spots at the top or bottom with this. And it's something that I'm working on to get rid of the flat spots. Okay. So you don't need to pay any attention to that. All right. So it is now 1:12. So for anybody that's watching on YouTube, if you haven't taken a free trial with us, go here to mytradingiq.com. Click on the purple button, right? There's no credit card required for the trial. Click on the purple button, and that is going to bring you to this registration page. On this page, all we ask for is your name, your email, your phone number. And if you have NinjaTrader and you want to use Ninja Charts, we have limited stuff on the Ninja Charts. We have the old school stuff on the Ninja Charts. You can give us your Ninja machine ID. If you're just going to trade on Ninja, and many people do, then we don't need your machine ID. You can just trade however you want on Ninja. Let me just show you what my Ninja DOM looks like, because some of you guys have DOMs that don't look like this at all, and they bounce all over the place, and they look crazy. Let me show you something with the regular DOM that we have. Right? This is gold. Now, if you see where price is the yellow thing right here, but you see how the white and the white keeps moving up and down? That's like the equivalent of the crazy looking DOM, the super dynamic DOM on Ninja. When the focus really just needs to be on where the price is, right there, where the price is. And on this, the yellow is where the price is. All the other stuff that's bouncing up and down, it doesn't really matter. It's where the price is right here. That's what matters. Okay. So if anybody's interested in getting their DOM to look like this is what my settings look like. I go to properties and settings, give it just a second here. There it is. This is what my settings look like. So you can set yours up to be just like mine if you want. Okay, that's what the properties look like for my DOM. And this one is gold. Put that back over here. All right, so you need to give us your TradingView login ID. If you want to use the charts, if you want to really get involved in the free trial, then you want to give us your TradingView login ID. Okay, you need to give us the TradingView login ID. All right. All right. Now let's see. Just checking to see who's in here right now. There's a short right here on the crude oil, and I can't find my DOM. I got all these windows open all over the place. It's too late to get into the crude because it's already gone. I think it's already gone. It would have to go 5 ticks into profit, 19 down to 13. It's already gone 6 ticks into profit, so it's too late to get into that one. And over here on the NQ, the entry should have been at the open of this bar right here, and it's too late to get into that because it's a 31 range. It's just going to go 4 points, and it's already done that. So we ended up missing both of those trades. Now this right here is suggesting to sell the open of that bar. That's already moved, so you can't do that. All right. When it went down here, it was suggesting buying the open of that bar, and it did move up about 20 ticks. And then it suggested selling the open of that bar, and it did move down about 20 ticks. So that is it. When it goes in the middle like that, it's nothing. It's got to go from oversold to overbought in a single bar across a flat line. Okay. It's too bad we missed out on this crude trade right here. But as I said, the crude is trading really, really slow right now. You know, the crude markets close in 45 minutes. So toward the end of the session, actually in about half hour, there might be some volatility as it gets really close to the closing time. You might see a little volatility jump into the crude. But as I said earlier, the volume is split right now between the H and the J contract. And, you know, to check that, you know, I used to have, on DT Pro, it was easy for me to check. On Sierra, it's not as easy for me to check that out. I'm sure there probably is a way for me to easily check it out, but I don't have that set up yet. But what you can do if you want to see where the volume is go here to technicals and go all the way down to the bottom and put a volume indicator on, put that guy on there. And then come over here to the side and do data window and click on this right here, change it to a daily. Change it to a daily, 1 day, and click on today. Right there, the volume for today is 160,053, 160,000 for today on the J contract. And if we roll that to the H contract, the H contract is 193,000. So you see how the volume is split? It's more on the H contract than it is on the J, but it's going to the J. So probably, I don't know, tomorrow or Sunday when the markets open up, that volume might roll to the next contract. Okay. That is one way to simply tell where the volume is. Okay, I'm going back to the J because that's what I traded all morning. But just throw a volume indicator on there and check it over here on the side. All right. So it is now 1:18. We have 12 minutes left. We don't have any trades here right now. The only trade we did have was here. That one enough to get the stop to break even. We don't have anything here on the yes, but we almost have something. Now this is a really nice chop that it's in right here. And in this chop, it gave one nice win right there, another win right there, another win right there. And that was it. So it gave 3 winning trades in this chop. Okay. Divergence trades work great in the chop. As a matter of fact, I'm going to flip this to be divergence trades as well over here. All right, because it's not trending. So I'll flip to divergence trades and we'll look for an opportunity to short it here. If we get an up close on this bar, we should have an opportunity to short it. Okay. And we didn't get an up close, we got a down close. And now it's starting to trend again. So I guess we can go back here to the trending. Yeah, we can short it right there. And there it was right there. An easy short right there. That happened so fast I couldn't bring it over and show you. It's got another one happening right in here. And here that one is, and that one just happened so fast. I tried to bring it over and show you. I don't think I got it there in time though. So we got 48 ticks on the first one and 48 ticks on the second one, just like that. Bang, bang. And we'll see if I can get it here on time this time. It's gonna get up into the overbought. If it gets into the overbought, I'm just gonna sell it. Okay, and there it is. I'm just selling it right there. And now stop to break even. And now we'll lock in 4 ticks and let it go, do its thing. And 4 ticks. That one didn't go straight down like the last two. All right, and you can do it again right there. Okay, I did do it again. It's not looking so good right now. We have a 36 tick stop on that. Yeah, I haven't had a chance to get the stop to break even yet. We'll see here. Nope, it stopped me out. Minus 36 on that one. But you see how easy that was, right? And right here, this said to buy the open of the next bar right there. Buy the open right there. When it went from overbought to oversold through the flat line, buy the open of the next bar. Friday, February 13th, Thursday. You made, sweet. Levi made $3,118 using the S. The goal for the day was 1,000. Okay, and there's a short over there. This is the same short over here on the crude oil. Sorry, it's not a new short. It's the same short that triggered before. It's too late to eat into now. This was just a long trade right here that I didn't do on the NQ that would have given another 48 ticks. The ES didn't end up giving us anything right here. We have 9 minutes left and picking up some volatility right here. This is good. Using the diamond principle. But I'm telling you, the diamond principle works. It's, you know, there was a thing long before you were born, Levi, called the money tree. What was that guy's name? Larry Williams and the money tree. It was before we had charts like this, automated charts and computerized charts and all that. It was really right after Windows was created and stuff like that. We used to draw it on a sheet of paper that was a graph sheet, graphing paper, and you didn't have minute by minute quotes like this. You had to wait till the end of the day, and you could draw it at the end of the day, say where price opened, the high of the day, the low of the day, and where it closed. All the stuff you see in a single candle, like minute by minute or second by second. You did that on a daily thing. And that was pretty much what it did, was the diamond principle. I mean, I'm calling it what I'm calling it now because it's all automated now, and they didn't call it that back then. Over the years, people have done it in different variations of it. This is my variation of it. But over the years, people have done different variations of it. There's somebody else who uses something similar to it called the square principle. I should call it the right angle principle because that's kind of what it does. But over the years, I mean, it's something that's tried and true that's been around for like 3 decades, if not more. Back in the beginning, people read the tape more than they did charting, stuff like that, technical analysis, because they didn't have the tools for the technical analysis way back in the beginning. A little history lesson for you. They read the tape to see where, like right now, the people who do volume profile, where they see where all the buyers are congregating, the sellers are congregating, and they make their trades based on largely on that kind of information. We do that too, but we don't do it for placing a trade. We do it for exiting a trade or managing a trade. Like, you see a big number like this up here, price wants to get up there to that number. There's a bunch of buyers up there or sellers up there. Price wants to get up there, and price wants to get down here. There's a bunch of buyers down here. So we don't enter a trade based on that, but you can manage a trade based on that. You can know that if this thing has any leg and it starts moving up, that it wants to get all the way up here to 6105, 6105. So what you can do is mix that with some technical analysis and look here and say, okay, 6105 is what the DOM says. 6105 is right there. Let's do this at 6105 and see, is there any reason for it to try to get to that place? And has it been there before, and what did it do before? It got here before, it bounced and acted as support. Got down below it, it acted as resistance. Resistance, got up above it, and right back down below it. So now it should go back up to it and act as resistance again. That's what the DOM is giving you. For people who read the tape or used to read the tape, that's what they would be looking for, things like that. Anomalies like that. Okay, and that's where it's going to go to, more than likely. If we stay in an uptrend, that's where it's going to go to. So what we do is we take the little bits in between, right? All these little pieces, because this is enough for us to get our goal for the day. That piece is enough. 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 Every one of those pieces, if you took one, was enough to get your goal for the day. Like in our actual trade setups, this right here was a trade setup. So we had a good entry on that piece. This right here was a trade setup. So we had a good entry on that piece. That's all you really need to do. Those of you guys who don't know, I'm giving this history lesson because Levi's fairly new to this, and it's worth saying. Back before we had all the technical analysis that we have right here, we drew it on the chart, like on a piece of graph paper, pencil, and it was the same sort of stuff. You draw the leg lengths and stuff like that and say, okay, well, this is what it should do. And then back then you had to actually get on the phone and call your broker to place a trade. And then you had a three-day hold before it was actually placed. And things were a lot different back then. But see, it's going right up there to that number. What was that number? This is the ES, right? ES, yeah, so this is the ES. 105, it's right up there. So the number's changed a little bit, but see, it's right there. That's the number. And I know, that was me too, Michael. In the 80s, that was me. I had this S&P 500 book. I'd get it a month late because back in the 80s, I was 12 and I didn't really have any money. How was your age back then, Levi? I was 12 years old when I started trading. And I didn't have any money, so I took what, like I used the Wall Street Journal, it was a day old. And I had this other friend of my dad's who traded, and he would give me his S&P 500 book that had all 500 S&P companies and their earnings, but it came out quarterly or monthly. Monthly. I think it came out monthly. It would have all 500 S&P companies in their earnings, their history of earnings, and I used to go through that book. I'd pour through that book and I'd find the companies that were best, and I'd trade them. My grandfather would give me some money in the beginning to trade with. So this is a long right here on the ES right now. And that's where it all started, way back then. I had a mutual fund when I was 12th grade. I started one. Right, so this we're going to break even on. Okay, so that's 500 bucks. If I move my stop up to right there and lock in 4 ticks, that's 500 bucks with 10 contracts on. Right now, right there is 250. Right there is 125. Right here is break even. It's trying to get up here. It's really trying to get up here to the 105 number. That 105 number up here. That's where it's trying to get up to. Okay, but we've got a good entry on this right here. And I could let it go all the way up there to 105. I can drag this down to the 105 number, since that's where I know it's trying to go to, and just let it run. Now, typically what I would do is let it get up here to the prior swing high and then trail my stop pretty close, because it might meet some resistance right there at the prior swing high. And what does the diamond principle say, Levi? It's going to exceed this level right here to determine the time aspect of it. You see, it hasn't exceeded that level yet, so you don't have the time aspect. You pretty much have the price aspect, as long as it doesn't go below this right here on the pullback. Pretty much have the price aspect of it, price element, but it's got to exceed that to determine the time element. Okay. So I had an order waiting over there on the crude oil for some reason, but I remembered that was from before. The gold had a nice long trade right here. I missed. Oh, it's 1:30. I didn't even realize it was 1:30. Okay, well, with that, I guess I'm going to wrap it up, guys. Thank you all for coming today, and I guess I can pass it back out to Fabulous Phoenix, Arizona, but let me do this first. If you haven't taken a free trial, go here, mytradingIQ.com, click on the purple button. There's no credit card required for the trial, right? Click on the purple button and fill out the form. It's a really simple process. All right, and with that, I can pass it back out to Fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yes, sir. Recap of the morning session.
Today it took 4 minutes and 2 trades to get to $1,600.
Good job.
Thank you.
Good
Thank
job.
you.
All right, guys, we made it through all the markets. So, the ball's in your court. Want to become a member? Piece of cake. Send an email to support@cfrn.net. In the subject line, I want to become a member. In the body of the email, your name, your phone number. I'm not going to call you, but we're going to send you an email that explains exactly what it means to be a passport holder. And there'll be a link that you can click to actually become a passport holder. Number one, you're going to get what 9 out of 10 new traders don't get, and that's live training. 2 hours of live training every trading day in an interactive environment. Live market, live trades, real money. You watch, you trade along, and ask every question that pops into your head. That's how you learn. Okay? 9 out of 10 new traders, they're just struggling. They bought courses, they bought videos, books, and none of those things, nothing wrong with them, but they're not a substitute for a living, breathing teacher. On top of the 2 hours of group training every day, you get private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. As a passport holder, you get the Logic 247 alerts round the clock. Get the concierge trade alerts the second they're published each evening. Monday morning, 6:15 a.m. Eastern. There's your weekly trading zones. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. It's everything a trader needs, all under one roof, one low price. And you're able to attend the members only workshop on Thursday night, and that would be tonight. Just send your email here, support@cfrn.net. Do it today, we'll get you into the meeting tonight. All right, let's wrap it up with our good word for the day. Yesterday it was hold fast. Today, hear God's voice. Revelation 2:11. He who has an ear, let him hear what the Spirit says. You can read the same scripture on different occasions and it will speak to you in totally different ways. The Greek philosopher Heraclitus is attributed to saying, "You never step into the same river twice." Now, you're going to want to think about that later. You never step into the same river twice. Now, I know you're going, well, no, there's a river down the road from my house, and I've stepped into that same river many times. Here's the rub. It may be in the same place and it may have the same name, but since the last time you stepped into it, things have changed. So it's not exactly the same river. So again, famous philosopher quote, "You never step into the same river twice." You'll scratch your head over it later. And you never read the same Bible verse the same way twice. That is a testament to its heavenly author. And his illumination is based on his intimate and unlimited knowledge of your circumstances, your desires, your fears, your past, your personality, and your destiny. But you must take time to listen and cultivate your sensitivity to what he is saying. The story is told of a music trainer hired to work with opera singers who could not hit certain notes even though they fell within their vocal range. It was a musical mystery. The trainer did extensive testing on their vocal cords, but he couldn't find any reason why they couldn't hit those notes. Then, on a whim, he tested their hearing. And what he discovered was that these opera singers could not sing a note they could not hear. The problem wasn't singing, the problem was hearing. He who has an ear, let him hear what the Spirit says. Revelation 2:11. Until you hear the voice of God, you won't be able to sing his song. Why? Because you're out of tune. That's how we get trapped in sinful lifestyles and negative cycles and destructive patterns. But when you open up the Bible and truly hear the voice of God, his loving voice, his affirming voice, his graceful voice, his convicting voice, his authoritative voice, his powerful voice, your life begins to harmonize with the Holy Spirit. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.